Hello, welcome to this video. Today I'm going to be doing a stock analysis on Universal Display Corporation. Now, if you like this video, please don't forget to like and subscribe. And of course, remember this isn't financial advice, this is purely entertainment and educational purposes. Now, if you don't know what Universal Display does, it is a company that makes screens for your phone, your monitor, your TV, whatever. And they make what is called OLED. That is the one which is a better black than a normal screen, than an LCD screen would have. And they have recently just gotten a patent on a blue OLED screen, and they are the only ones in the world which are allowed to make it. And you might think, well, why the fuck would I give a shit about that? Well, you would, because it is a lot better than the normal OLED screen, because it has quite less power usage, and that is nice because imagine your phone would use 7 or 5% less power. That would be huge, just considering how much longer it will be able to hold power, as well as your laptop, and also just because the screen technology behind it is a lot better. And given that it is trading so cheaply at the moment, keeping to the, as you can see up here, back in July of 24, we were all the way up in 237, and now we are trading at 134. So I think it's quite great. Of course, we won't see any of that yet because we do need to see more companies investing in it. A lot of new products are getting this blue OLED screen, but we need to see that newer and newer and newer companies, of course, do it. Of course, iPhone is using it on the newest, as well as some of the Chinese companies like OnePlus and Xiaomi for their phones. But many of the phones are still using normal screens. So until that, a lot of other companies use the blue OLED screens from Universal Display. They aren't going to see that huge gains in earnings until then. Now, currently for the day, as you can see, we are up by 7.5%. That might be because we had the earnings today, which is quite nice that we see them jump on an earnings day. That is always a great signal, of course. Now, we can also see that they have been trading quite up and down in the RSI, primarily right down here. But we also have some periods where we're trading sideways, both on the stock price as well as the RSI, which means that the downwards and upwards momentum is mostly the same. Of course, we did see quite a huge fall 2 times here, as you can see, all the way up from 224 all the way down here to 170 almost. That was because they missed earnings. They didn't even miss it by that much, which is actually quite insane, only by 3%, but investors really did not like that. And then also on earnings here, which they actually surprised on, and they earned more money than anticipated. But still, they even tumbled more. But yeah, I like this company quite a lot. I have to say I don't own any personally, but I am waiting to see if they increase and get some more momentum because I actually would enjoy having some of these, and I want to see them make a golden cross and just have a bit better technicals than this short-term upwards. I don't want to see it make the dead cat bounce movement, which is, if you don't know it, it is a technical term where it bounces up and then it goes right back down. It comes from, let's say you throw a dead cat into the ground, then it's gonna bounce and then it's gonna go down again. Now, let's take a look at the earnings. As you can see, some earnings they beat quite nicely, some they missed. This was the one where it fell through the floor, and then they beat this one by 7%, and then the latest one down by 9.4%. And we don't see the news one today because it hasn't been updated yet. Now dividends, they pay out dividends 1.31%. As you can see, they paid out here in March, and they paid out in December, and they paid out in September, which means they pay out 4 times a year, and this is great because then you can get your dividend snowball rolling a lot faster, which of course, rather than paying out 1 time a year, they pay them out 4 times a year, which I personally find better. Now, as you can see, they do make nice money. As you can see, they make millions and millions of dollars, which is quite nice. And as you can see, it is also a relatively nice sized company with a value of $6.4 billion. So yeah, they make it quite nice money, as you can see here. And as you can see, organic light emitting diode, because they make screens. It is really that simple, and they also make royalty and licensing fees. Say iPhone wanted to use their screens, well, then Apple is allowed to produce and use on their phones, but they would have to have a royalty and licensing fee, or pay a license fee and royalty to Universal Display Corporation. So that is also quite nice because they own the technology behind it because they have the patent on it. Now, if we take a look at the seasonals here, as you can see, let's just go back, let's say 10 years. As you can see, some years we have huge gains here. Also in 23, we had a nice year. And some years we like quite flat, and some years we take huge cut off the stock price. As you can also see in 24, not the greatest year of all time. So yeah, it is a quite coin flip stock, you might say, because we have ups and downs. So this is, you need an ice in your stomach to own this, because this isn't just going to be the one that is sitting in the bottom of your portfolio with plus 5% one year, minus for the other, then plus 11. It is a bit more up and down. As you can see here, it is up and down quite a lot. So if you you can't handle it a quite sharp rise and falls, you shouldn't own this stock at all. Now the technicals of this: for the day, of course, it is a buy, and for the month, it is a strong sell in the moving averages and a sell in the summary. And as you can see, that is because even though it is up for the day, it is down for the month. As you can see, it has just been down. We were trading all the way up in the start of or end of February and start of March. We were trading all the way up here in 160. So before we reach that, well, it is still gonna be a sell in the technicals until we see some better movements. Now the analyst rating on this are quite nice. We have 13 analysts and 9 strong buy and 4 hold. And as you can see, they are quite decent. The best one is up by 58%, and the average is up by almost 33%, which I think is quite realistic, to be honest. It wouldn't surprise me if it ended the year in 180. That would be quite decent. I could see it hitting all of these three, both the minimum, the average, and the maximum. Just because of how volatile it is as a stock, it would really not surprise me at all. Now, annually, as you can see, they are expecting to make more and more money quite sharply in 27, and that's because that is when it's estimated that more products than not is going to using this blue OLED screen, and they are going to make a lot on royalty and license fees else just by making them. Now that was my analysis on Universal Display Corporation. Now, if you like this video, please like and subscribe, and make comments of any other companies you want me to make a stock analysis on in the comment section below.